All right, welcome to Talkin' Investing. I am Tom, and as always, this is not financial advice. Today, I want to talk about RIOT Blockchain, stock ticker RIOT. They put out their monthly operational update, so I want to go through that and do a little bit of a deep dive on RIOT and what's going on there. So RIOT is a Bitcoin mining company, and we cover Bitcoin and the Bitcoin miners quite a bit on this channel. Now, if you're watching this video, there's more than a 50% chance that you are not subscribed to the channel. So if you're interested in this kind of content, please do us a favor and subscribe and hit the notification bell. Also, if everybody could smash the like button, that would be a big help. Lastly, in the pinned comment, you will see a link to our free Discord. So we would love to have you over there. We talk mostly about Bitcoin and the Bitcoin miners, but you're welcome to talk about all things investing. Okay, let's go through RIOT Blockchain. I want to focus on their monthly update and talk about a few things, and then we'll take a look at the chart and we'll talk price and potential price prediction. I'm making this video prior to the open on Monday. So RIOT closed on Friday at $6.21. That left them at a $788 million market cap. Now, this is historically low for RIOT Blockchain. All of the Bitcoin miners are at or near their 52-week lows. For RIOT to be under $1 billion is actually quite surprising to me. This was once a $6 billion company just about a year and a half ago, so their market cap is down radically. And so I want to talk about that a little bit later, and I like to talk about market cap versus stock price because some people get confused and they feel like there's dilution that has caused the decrease in the price of a stock. But I want to show you in this case, it's not the dilution. This is just a straight up decrease in their market cap. The value of their company has gone down drastically. I personally believe it is disproportionate. So obviously this is not financial advice. Please do your own due diligence, but I'll be explaining to you my thoughts on where I think RIOT should be trading. So let's take a look at their monthly operational update. RIOT Blockchain announces May 2022 production and operations update. RIOT produces 466 Bitcoin in the month of May 2022. Now, the first thing that we always do is compare this month's production to the previous month's production because these Bitcoin miners are small cap, high growth stocks. So one of the stories of a high growth stock should be sequential growth. And more specifically, I look for month over month sequential growth. So in this instance, RIOT in May produced 466 Bitcoin. If I go back to April, you're going to see that they produced 508 Bitcoin in the month of April. Now that was their all-time record. It's the first time they've ever been over 500. So they did not keep up with April. So I want to go through a few of the reasons why May is lower than April and talk about are there any problems in there and what's going on. In May 2022, RIOT produced 466 Bitcoin, an increase of approximately 104% as compared to May 2021 production of 228 Bitcoin. So there's your year over year. So year over year, obviously they're up over 100%. They are trending in the right direction, but I'm going to hone in on month over month because their production actually went down from the previous month. RIOT held approximately 6,536 Bitcoin, all produced by the company's self-mining operations. So they have not bought any Bitcoin. They're not in the business of buying Bitcoin. This is all self-mined, about 6,500. So this puts them with the top group of Bitcoin hodlers. There are a few that are ahead of them, but 6,000 plus is it in that elite top 5 group. So depending on your philosophy on Bitcoin holding, some people think that's a great thing and other people don't. For me, it's a part of a very good, strong balance sheet, so I do like that on their balance sheet. Okay, in May 2022, RIOT sold 250 Bitcoin, generating net proceeds of about $7.5 million. So in 2021, RIOT straight up just hodled all their Bitcoin. Over the last 3 months in 2022, they have been spending about 200 to 250 Bitcoin a month. The price of Bitcoin has been going down. And what RIOT seems to be doing is trying to have a more balanced approach. Most of these Bitcoin miners have been hodling all of their Bitcoin over the last year and a half, and they've been diluting their stock, which has been fine given the rising price of Bitcoin. However, we now are about 6 months into Bitcoin moving in the other direction. So I think all the Bitcoin mining companies are taking a second look at that strategy. RIOT is doing what I actually believe in, which is they are selling a portion of their Bitcoin. With 250 Bitcoin sold, that probably paid for some of their machines and improvements as well. So to me, I like that. It's a balanced approach. Again, that's a personal opinion. Everybody has their own opinion, and a lot of people have very strong opinions on hodling versus not hodling. RIOT currently has deployed a fleet of 43,458 miners with a hash rate capacity capacity of 4.6 exahash per second. So I want to go back to April and show you what they were doing then, because remember, we're at 4.6 here at the end of May. So in April's update, they said Riot currently deploys a fleet of 46,375 miners with a hash rate of 4.7 exahash per second. So they went from 4.7 exahash in April to 4.6 exahash in May. So this represents the first time, I believe, in the last year and a half that they've gone backwards in exahash. Obviously, it's only 0.1 exahash, so it's not a big deal, but they do explain why, so I want to talk about why. And it's one of the reasons, obviously, that they mined less Bitcoin. Okay, so they say here, we are initiating a project to refurbish our fleet of S17 Pro Antminers to improve their overall hash rate and efficiency. These enhancements are made possible by the improved operating environment facilitated by our immersion cooling technology. While undergoing the refurbishing process, our fully depreciated fleet of 4,000 S17 Pros will be temporarily decommissioned. These 4,000 miners will no longer be counted in our deployed fleet figure, and the corresponding 225 petahash or 0.225 exahash will no longer be counted in our hash rate capacity figure. So this is the reason they went down from 1 month to the next. They deployed about 1,000 new machines. They took about 4,000 of their older machines offline. Net, they actually ended up decreasing in their amount of exahash. However, you'll see these are the S17 Pros, so they are not as energy efficient. The rest of their fleet is basically S19s and above. So the S17s, with Bitcoin at the price that it's at, without them being in immersion cooling, it's possible that they're not making money on those machines. So what they've done is decommissioned them. They're going to prep them for immersion cooling. They are removing that. So that is the reason that their hash rate went down. They have been projecting 12.8 exahash by January of 2023. They've been on that trajectory for the last 12 to 15 months. They've been very steadily moving towards that. This month, they decreased that goal from 12.8 to 12.6. Obviously, that 0.2 are these 4,000 machines that they are decommissioning. So they are currently not counting that in their active exahash rate, and they're not counting it in their projected exahash rate. So if they can get those back online, if the price of Bitcoin goes back up, I'm guessing they will readjust back to 12.8 exahash. Okay, so I'm trying to account for the decrease from 508 Bitcoin mined in April and 466 Bitcoin in May. So there's a few variables. There was one extra day in May, so that actually should have helped them, but instead they have mined less. So what that means is, the first thing is we know they took 4,000 machines offline. However, I will say with all that, one of my issues that I have with Riot Blockchain, and I'm hoping to see some answers to this over time, they are a little bit less efficient than a lot of their peers. If you do the math on this, they're at 4.6 exahash. They did 466 Bitcoin. Essentially, that's about 100 Bitcoin per exahash. That is less than their peers. This is about the lowest production level they've had per exahash in the year 2022. So they've ranged anywhere from this was about 100. They've ranged up to 120. A lot of their peers are between 120 and 130 Bitcoin mined per exahash. So that may not sound like a lot, but that's 75 to 100 coins per month. So that does add up. And as we move into a scenario where Bitcoin is at a lower price, it's more and more important to be as efficient as possible. So I'm hoping to see over time, they're implementing this immersion cooling. They're going to have 200 megawatts of immersion cooling. If that brings up their overall efficiency and puts them back on par with a lot of their peers. Now, having said that, they mined 466 Bitcoin. That is likely to be in second place out of all the publicly traded North American Bitcoin miners. There is a small chance that Hive Blockchain will have mined more than that. However, Hive mines a combination of Bitcoin and Ethereum, so those would be Bitcoin equivalent, not really Bitcoin. Riot has consistently mined the second largest amount of Bitcoin over the course of the year 2022, and I think that's going to hold up again this month. However, we would like to see their efficiency increase a little bit. Okay, so mining development and shipment update. Since its last monthly update, Riot received an additional 1,701 new S19J Pros. They have an additional 7,855 miners staged for deployment. Upon deployment of the staged miners, the company expects to have a total of 51,313 miners deployed with a hash rate capacity of approximately 5.4 exahash. So that's a significant increase. I don't know how long that's going to take, because I will tell you, most of these they had staged already by the end of last month, meaning the end of April, and they were not able to get them up and running in May. So this is probably a construction issue. They're waiting for construction to catch up. So if that happens in June, then I think we can expect to see them run to that 5.4 exahash. If not, it may take until July, but that is a significant increase, and that will still keep them in a very solid second place overall from an amount of exahash working. More and more of these will now be in immersion cooling, so we'll see if their efficiency increases accordingly. Okay, let's take a look at Riot's chart. This is Riot on the 1-day time frame. So you're going to see I have a few different lines here. There's a red line at about $12.93, so just under $13. On January 24th, when Bitcoin hit its first low of the year on 2022, pretty much all the Bitcoin miners also hit their low for the year, Riot being no exception. So they got down to just under $13. And you can see from January 24th all the way through until late April, this line held very strong. When Bitcoin hit its low for the year in 2021, so that was in the summer of 2021, in July, Bitcoin got down to 29,000. And at that time, Riot was trading at $25. We are now a year later. Bitcoin is once again at or around 29,000. Today it's at 30,000. However, Riot is down 75% from this white line, which was their long-term line of support for the entire year of 2021. So Riot has sold off in a very, very significant way. I'm just going to pop to their 1-week chart for one moment to show you just what a drop-off they've had. From their all-time high back in February of 2021 until now, which is the beginning of June 2022. So that's over a year, but not yet a year and a half. Riot's stock price is down 92%. That is a monstrous move to the downside. So you can see this has been in a downward spiral. We have had a few pushes. If you remember back in November, Bitcoin hit an all-time new high, and so Riot recovered back up to $46. Even since then, its stock price is down over 86%. So just a quick look at this. This is Riot's market cap over the last couple of years. So you can see back in February of 2021, their market cap was $5.93 billion. All of the small cap high growth stocks had a little bit of an overbought position back in January and February of 2021. Riot was no different. However, when Bitcoin hit its all-time high of 69,000 back in November of 2021, this was a $4 billion market cap company. Remember, they're now under $1 billion. They're at $788 million market cap. That is down drastically. So again, when we look at the reduction in this stock, it's not because of stock dilution. It is because the value, the market cap of this company has gone down drastically. So if I were to look at just a few quick price targets, Riot crashed to its 52-week low on January 24th. So that was that red line at around $12.93, so just under $13. Just to get back to what was their new 52-week low, Riot stock would have to more than double to get back to that point, which is just under $13. So that would be a 105% increase in the price of Riot stock if it could get back up to this line of support. And again, for most of these times, Bitcoin was at around $29,000 as Riot was in the $13 range. So they have been sold off dramatically since then, past the extent to which Bitcoin has been sold off. I'm just going to do one more because the numbers start to get ridiculous. If Riot was to get back to where it was on March 29th, so that was 2 months and 1 week ago, that would be a 278% increase in the price of Riot stock. So you can see how these things can add up quickly. So obviously, please be careful. This is not financial advice. We don't know when or if Riot is going to go back to these prices. And in the meantime, it continues to hit 52-week low after 52-week low. So this is a highly volatile stock. So please be careful. So that's my update for Riot right now. I will go through and do a Riot versus a crypto winter scenario. So look for that in an upcoming video. So if you made it this far, thanks so much for watching. Please remember to subscribe and hit the like button. Thanks for watching, and we will see you in the next video.